Hey investors, welcome back to Stoxpot, your go-to podcast to unpack what's happening around various stocks, industries, and economy. It's me, LEKSHMANmj, and today we are diving deep into one of the fastest growing industries, that is India's e-commerce sector. Did you know that this industry is projected to touch $200 billion by 2026? With over 15 million jobs created directly or indirectly, e-commerce is not just about shopping anymore. It's reshaping how businesses operate, how people shop, and even how rural India connects with urban markets. So whether you are an investor or a business owner or simply someone who is curious about trends that shapes our lives, then this episode is absolutely for you. Now let's see what exactly is driving this massive growth in India's e-commerce sector. Well, there are three big reasons behind this: increased internet access, affordable smartphones, and digital payment systems like UPI. Over the last decade, these factors have transformed how Indians shop online. For example, do you know that non-cash payments during e-commerce transactions jumped from 20% 5 years ago to 58% in 2023? That's a huge growth. People now feel safer and more comfortable making purchases online because platforms like UPI make payments easy and secure. This shift has opened doors for millions of new customers, especially in smaller cities and villages. Now here is something interesting. While Tier 1 cities like Mumbai and Delhi were early adopters of e-commerce, today Tier 2 and Tier 3 cities contribute over 50% of all online shoppers in India. But why is this happening? Because companies are heavily investing in logistics and delivery networks. They have set up warehouses closer to customers and use advanced technologies like AI-powered route optimization to ensure faster deliveries even in remote areas. For instance, platforms like Blinkit and Zepto are already doing this in metro cities. So having said that, now let's see what do Indian customers want when they shop online. First, convenience is king. A survey showed that 72% of respondents increased their e-commerce spending in the past years because online stores offered them better prices, easy returns, and exclusive deals. For instance, if you buy a product online but you don't like it, returning it is much simpler than going back to physical store. So exactly, this flexibility encourages more people to shop online. Second, sustainability is becoming a priority. About 49% of shoppers prefer eco-friendly products, while 63% look for organic options in beauty and personal care products. So currently, brands that focus on sustainable packaging and ethical practices are winning hearts because modern consumers care about the environment and they want the brands to reflect those values as well. Thirdly, influencers play a bigger role in guiding buying decisions. Platforms like Instagram and YouTube have become hotspots where influencers recommend products through relatable content. These recommendations build trust because they feel authentic unlike traditional ads. Lastly, speed matters. Consumers now expect their orders to arrive quickly, sometimes within hours. In fact, most of the respondents said they prefer faster delivery for groceries and fashion items. So to meet this demand, companies are building dark stores strategically at a location near their customers. These small warehouses stock everyday essentials so that the orders can be fulfilled super fast. Of course, no success story comes without challenges. Now let's talk about some of the hurdles e-commerce players face in India. One major issue is intense competition. Global giants like Amazon and Flipkart compete with local players like Tata Neu and Reliance JioMart. Added to that, the competition becomes even tighter with the rise of quick commerce platforms like Swiggy, Instamart, and Blinkit. With so many options available, companies often resort to price wars to attract customers. But guess what? Constant discounts hurt their profit margin and make their long-term survival tough. Another challenge is logistics. Delivering products to remote areas involves poor roads, high cost, and failed delivery attempts due to unclear addresses. Plus, return rates are sky high, especially in categories like fashion and electronics. This leads to processing exchanges and refunds, which further gets added to their operational expenses. Next, regulations are also tricky. For example, foreign-owned platforms can't hold inventory or sell private label brands directly. Such policies create uncertainty for businesses trying to plan ahead. And finally, fraud risks remain a concern. Despite the rise of digital payments, cash on delivery still accounts for 60 to 70% of online orders in non-metro cities. This leads to higher return rates and cash handling costs. Additionally, brands also has the risk of cyber attacks and data breaches, which can damage their reputations. But despite these challenges, investments continue pouring into the sector. In April 2024 alone, private equity and venture capital firms invested $341 million in e-commerce startups. Big names like Amazon, Google, and Walmart are also doubling down on India. For instance, Amazon plans to invest $26 billion by 2030, while Google recently pumped in $350 million into Flipkart. The reason why these investors are so bullish is because the potential is enormous. Currently, e-commerce makes up 25% of India's total retail market, but this share is expected to grow up to nearly 40% by 2030. Also, companies see opportunities not just in selling products, but also in offering services like subscription models, personalized recommendations, and social commerce. Now looking ahead, the future of India's e-commerce sector looks incredibly promising. By 2028, the market could reach $292.3 billion, growing at a CAGR of 18.7%. Some of the key drivers include rising internet penetration, digital literacy program in rural areas, and innovations like generative AI that helps personalize shopping experience. We will also see more D2C brands emerge. These companies connect directly with customers through apps and websites, cutting down the middlemen. Right now, D2C sales account for 10 to 15% of the market, but this number is expected to grow rapidly. In short, India's e-commerce space offers endless possibilities. It's dynamic, innovative, and full of surprises.